Okay, I'm back. Sorry for the little snafu. This will be part two, and I'm going to really talk about earnings and finish up where we were. I don't think there was any blank space at the end. I just hit the stop thing by mistake when I meant to hit the pause. Before I get started, I do want to just quickly review the first slide. Again, this is Jeffrey Scott. It's the 19th, and this is my email address. And then, especially around earnings, this is educational only. I'm a doctor, not a broker. Anything I tell you should be in the spirit of education and not investment advice. I am independent. I pay for my tools. No one gives me money to say good or bad things. Trading involves risk, and if you take option trades, you must know how to trade options. I think options are wonderful, but boy, are they risky if you don't know what you're doing. Refer to the Option Industry Council website for that. So enough of the disclaimer. So where I ended, I was talking a little bit about how I monitor my positions. I build a large watch list. I watch it during the day. I'm especially going to look for, on the left-hand side or in the middle, things that pop up when the market is open. What's very cool is I can find out, I know gaps right away, so I know who might be a viable gap up. There's a lot of things I could do with my radar screen. Now, Tuesday's an extra special day because we have Netflix earnings after market. So why am I so excited about Netflix earnings? Well, mostly because people who follow me know I made a lot of money for me and others over the last couple of years. Now here's the problem with Netflix. Past performances are not a true indication of future benefit. So Netflix is different this year. It started moving up in September, corrected a little bit in December, and started running again near the end of the year with a small move. Notice these are $300 numbers here. So had you bought it at the low in September, let's just go with the white here. And you're still holding it, you're up about 35%. Now, if I was up 35% in my Netflix, I might be comfortable holding it through earnings. The way I look at earnings is I try and get an edge, and we'll look at the program that gives me the edge. And I'm willing to hold things that I'm deep in profits and ride out because I think that longer-term holdings is how I make most of my money. But I'm not always going to initiate a position unless I have an edge. Well, here's your edge. We'll look at Seasonality Trader, and what does it show me? That Netflix around earnings spikes up to the upside. In fact, over the last 10 years, if you bought it on January 20th and sold it on March 3rd, you were up 9 out of 10 years for an average return of 26.8%. And the one down year, you lost less than 1%. So if you knew you could go to Vegas and 9 out of 10 times you're going to win, or you won 9 out of 10 times, are you going to roll it 11th time? Probably. I think it's a high probability trade, but it might be different this year. What's different? Well, why is Netflix so strong in January? In my humble opinion, it's because we give gifts at Christmas time. Those gifts include smartphones, iPads, computers, smart televisions, Apple TVs, Roku devices. If you don't already have Netflix, you get a free trial. Sometimes I think that Netflix stock is controlled not by revenue or earnings, but rather by the growth of new subscribers. So you get a bolus of new subscribers at end of year. Now, the U.S. market is pretty mature, so that might be a problem. The international market's got a huge upside, but as they raise price, can everybody afford it internationally? Then add to the mix Disney. Well, I didn't drop Netflix for Disney. I took Disney too because you get Hulu and ESPN. But I kept my Netflix. I think that's what most people will do, but we don't know that. So you've got risk here that you've never seen. So I think you have to at least be careful with Netflix. Probably not a all-in trade this year where it's been in the past. Right now I'm sitting on 2 Netflix trades. I'm sitting on a small dollar trade here which is I am long. I give it another week after earnings. I am long 327.5 calls and short 330 calls. As long as it stays above 330, I will have the $2.50 minus the dollar it cost me. I'll make $18,000, $20,000 on that trade. That's a simple trade. Sideways, up, I win. I also could lose. The other trade I opened up is a more bullish approach where I have a 320, 370 call position. And I'm a little nervous about it this year. I don't want to miss it and say, dang, I wish I would have taken it. But I only opened up a 20 vertical spread. Now, there's a good chance I'll do a trade on Tuesday before earnings, but I've got to see how it's behaving. And, clearly the edge says it's going higher. Now, I also have a program that I got from Dr. Keith Wade, which he sells and I paid for a substantial amount of money. And I like it because it gives you a sense of what he predicts or the program predicts Netflix will do. And Netflix has been running exactly as you would predict it with a turn up at the end of the year. I don't see an obvious buy signal here. This is an earnings play. Now, as I said, I'm long. If I lose it, my risk is relatively modest. It's not going to break my account. There have been years where I go much more aggressive. I don't feel it this year because of the concerns. Now, that said, do what you feel is appropriate. This could still be a big year. I think there's more risk than we've seen. I look at every earnings trade that way. Again, I'm not that bearish. I've got 2 long trades. Now, the other thing is I may take profits on those trades. They're both profitable right now and sit this out. All that will depend on how I'm feeling, how the market's working on Tuesday. What else would I show you? I'll leave up the rest of the buy list here. And you can see a number of biotechs that we've already looked at, made my list. Some consumer finance, defensive play, infrastructure, specialty pharma. Feel free to take them and follow them. Just because they're on a buy watch list doesn't mean I'm going to buy them. I'll let the market dictate what I'm going to do. So be careful this week. You've got in the next couple of weeks Netflix, Apple, Amazon, Google, Microsoft. If this market wants to roll over, there's going to be a lot of opportunity for disappointment. Then again, strong earnings, we go to the moon. I doubt it. We are getting extended. So on that note, I'm going to say goodbye. Sorry I had to do this as a separate, but I just want to give you a taste of how I'm going to be handling Netflix going into earnings. Goodbye, everybody. Have a great weekend.